Hey, good morning. Let's go over today's trade plan. So in the overnight session, we had support around the 87 VPOC, and on the upside, we had resistance at the 05 to 07, and then strong resistance at 15 to 18, which ended up being a pretty decent rejection spot for a move back down towards 06. So at this point, heading into the open, we have pre-market resistance 12.5 to 13, and initial resistance 15.5 to 17.5. And bigger picture now, we're approaching some pretty decent resistance areas. So contextually, we had a market that was oversold, and now we've bounced a pretty decent amount. And at this point, as we head higher, we've already seen over the last few days that every resistance zone along the way has provided either a rotation that is still providing 6 to 8 points, or a larger failure where the market is failing for 20 to 25 point moves. As we head higher, that theme can still continue to be in play. And even in the overnight session, first we failed at that 04 half area, and then the market picked up. So right now this market is in a state where on the larger time frames we're pulling back into some decent resistance areas, and first test of those zones is resulting in some nice short setups. So short term, we know that buyers have been pretty dominant, but now we are approaching some nice zones where there could be some bigger picture response from the sell side. So the first area where that can happen is that 15.5 to 17.5, and that was the overnight key resistance, right? 15 to 18, and we've already seen a rejection and a rotation off that zone. So now as we head back up there, we just have to keep in mind that it's going to be second test. And above that, we have resistance at 19 to 20, 23 to 24 to 75, but the next major resistance is really at 28 to 31. So in the event that the market ends up going through the 19 to 20 area, the next major resistance is 28 to 31. That's a spot where larger time frame sellers can be quite aggressive, and we could see a bigger failure. And that's if we even get there. We have to deal with this 15.5 to 17.5 area first. On the downside, we have this pre-market support 04 to 06. The area has already been tested, and at this point, we're not really actively looking to trade 04 to 06, but we're just going to use it as a reference point to see whether the market is holding above it or not. If it's holding above it, then we're likely going to go up and test 12.5 to 13, potentially 15.5 to 17.5, and if it starts failing, then we could be heading down towards the gap fill at 1900, and after that the 96 to 98, and depending on the reaction we get there, potentially even lower, right? But the next support below 04 is really at 96 to 98. Buyers could be active there. That's something we're going to have to gauge in real time, because one thing we're going to be looking out for if the market starts failing and heading lower is just the level of momentum we're seeing on the downside. And the question we're going to be answering is whether the market has found a larger time frame seller at some of these higher prices, and if that can sustain some downside momentum. So as we go down, these support zones can still provide rotations, but we really have to figure out what the target is going to be on any long setups we take, and whether the reward to risk is really worth it. And that's something that we are going to have to do in real time, because at this point, if the market really does start failing off of these bigger picture resistance zones, then we could actually get some sustained downside movement. Now, typically, in order for the markets to fail, the major indexes have to hit resistance around the same time. And the only red flag for sellers in the S&P is that the other markets may still have a little bit of upside left. So the major resistance in NQ, for example, is around the 39.28 to 39.33 area, right? So that zone up there is major resistance in NQ. Hasn't quite reached it, so that's something to keep note of. On TF, the next major resistance is around 11.05 to 11.07, and that's an area where we could see a bigger rejection in TF. So if TF hits that resistance, and NQ is hitting resistance, and ES is at resistance at the same time, that's where it can create a situation where these sellers can be active on the larger time frames across the board, and we can see a bigger failure. So today is going to be a bit of a challenge in the sense that we're trading near resistance, and the upside could be limited here, and that's something that we are going to have to figure out and gauge in real time to see whether the buying we've seen in the overnight session can really continue, and whether there's enough strength to actually go through 15.5 to 17.5, 19 to 20. Those are pretty important inflection points in the market, and again, those are bigger picture resistance spots, so they're areas where the market could just all out fail and result in a bigger pullback. Now, if we start seeing some bigger momentum on the downside, which would be visible via strong negative tick readings, internals trending lower, then on the downside we could pull back to 91.5 to 93.5, 86 to 88, and potentially even lower. This market is still running on pretty decent volume, and we're still seeing some pretty decent ranges on the day time frame. So even today, we could get quite easily a 30 to 35 point day session range if the volume sustains at these levels. So just have to keep that in mind too. As the market opens, we're figuring out whether the high is in or the low is in, and then depending on that, figuring out what the range on the day could be. And even conservatively, today could be a 25-point range day. So all that stuff really needs to be kept in mind. And as we approach these upper resistance zones, as long as there aren't any major red flags telling us that the market can just slice through them, those spots can be good short setups for at least a rotational type trade where the market can move 6 to 8 points lower off each zone. Above 17.5, above 18, you have to be a little bit cautious because the next major is 28 to 31. But even that 23 to 24.75 can provide a spot for failure, especially if the other markets are also hitting resistance. So right now we are in this environment where there can be a lot of back and forth. Even though the overnight session has been relatively bullish, it doesn't mean that that theme has to continue into the day session. We could see either a weaker day session where the market heads higher, but it's not quite as strong as the move in the overnight, or potentially even all-out failure. So just have to stay open-minded and flexible, take in the information as it's presented in real time, update our views, but just keep that bigger picture in mind that on the larger time frames, this could be failing at 15.5 to 17.5, 19 to 20, or if it goes through it, 28 to 31 is the next major spot. That could be a spot for failure and a bigger pullback, back down into the 1900 level and even lower. So those are really the main ideas heading into the day. Short term, we know that buy side is more dominant, but we're going to be keeping an eye out to see if those larger time frame resistance zones really become active and spots for failure in the market. So those are our main thoughts on the econ calendar. Existing home sales at 9 a.m. Central. Aside from that, no major econ release. So that being said, let's see where the short-term buy side can really hold it up, and then see what kind of reactions we can get at the resistance zones, and we'll take it from there.